Hi guys, and welcome to the 9th episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we'll be looking at what's happening in the markets. There is quite a number of events that are basically influencing the direction of the markets are taking. So we'll try to understand these events and see how we can trade going forward. So our key focus will be on what's happening to major currency pairs. We look at the major US indices. We look at top cryptocurrency pairs and also commodities. So once we get through, then everything else will be easy. So I'm going to begin right away by basically noticing that in other trading years, whenever we get into December, the markets tend to slow down. We tend to experience lower volatility in the markets, and at the same time, the market moves tend to be relatively smaller. However, in this particular December, we are seeing very volatile markets, and this is as a result of the events that have been happening across the world. So we know that there is a lot of things that are currently active as we speak right now. One of them is the COVID-19 situation in China. Also, at the same time, we have the war between Russia and Ukraine. We have the energy crisis in Europe. We also have the inflation crisis happening all over the world. And all these have at least some form of influence in the markets. So we look at them one by one and see how they influence the markets and potentially the targets to focus on for trading. So let's begin right away. So this week began with a lot of movement, especially as a result of the strong ISM Services Index data, which was reading 56.5 versus an expectation of 54.4, and this was yesterday on Monday, indicating a strong services sector in the US. And on top of this, remember Friday last week was the NFP day, or the non-farm payrolls in the US, where the US basically created 263K jobs compared to an expectation of 200K jobs. So these overall beat expectations. So the jobs are very strong right now in the US. And at the same time, the services index indicated a very strong and healthy service sector. So remember, the Fed has several mandates. One of the mandates is to basically ensure economic growth. The other one is to ensure full employment. Remember, it has already achieved both. So the other mandate is basically to control or to maintain stable prices. So with inflation running high in previous months, reading up to 9.1%, the Fed has been very aggressive in hiking interest rates to control the rising inflation. And in the last meeting, the Fed hiked by 75 basis points, getting the US interest rates to 4.0%. So this time, we're expecting a slower rate hike to about 50 basis points. And now that the US economic data is indicating a very healthy economy, then there's still a chance that the Fed could even go higher to 75 basis points, besides the expected 50 basis points. So what this means is that there's an expectation that the dollar is going to strengthen and the equities will remain under pressure to keep moving down as long as liquidity is moving off the markets. So if you look at what the charts are saying, just a moment quickly. I'll start with the major indices in the US. Let's start with the S&P 500. So as you can see, this has been majorly on a bearish trend. So right from the beginning of the year, this is why I started the year, market kept going down, rallied somewhere around February, March, got to the same trend line, went all the way back down, and then rallied around July, got to this resistance, dropped all the way down, then back up in the last couple of months. This is the last 2 months where the S&P 500 was majorly bullish. After hitting this particular trend line, we are seeing there's a lot of pressure to move towards the lower side. So there's a good chance that the bear market continues as long as nothing has changed fundamentally. And if this continues, then it's very important to track these price levels to see indications of a drop towards the lower side. So there's a good chance that the S&P 500 could now start going down. And if it does, then tracking this lower trend line on the 4-hour chart might be pretty interesting, because once it's broken, then it might be the confirmation that we are going further down. So currently, as we speak, the market is testing the lower trend line. And if it breaks this, then there's a good chance that the price will keep on moving downwards. So besides the S&P 500, if you look at the US 30 or the Dow Jones Index, then it's the same thing. So markets have been on a bearish momentum. Notice the beginning of the year right here. market kept going down and then up, down, and then up, down, and then up, and there's a very strong correlation with S&P 500. So for the Dow Jones, it has already broken this upper trend line, retested the area. You can see how it broke, retested the area, then kept moving higher. We go to this particular high, which was equivalent to the previous swing, and this other swing was in August. And then after this, the market managed to break towards the upper side. So after this break here, remember last week we had the NFP data, and the market pushed further downwards before pulling back up and then moving down yesterday. Today seems to be getting quite some pressure to continue pushing this momentum. So notice that for the first time, after hitting this high, market attempted to go down. Second time, another attempt. Third time, another attempt, and we could be getting another attempt that could potentially get us to the beginning of this move right here. So there's a good chance that we could see the Dow Jones keep on moving downwards, and our nice target would be 33,640 if we happen to get a similar move such as yesterday or even the previous day. So if you look at the US tech, I remember tech has been one of the weakest sectors in the S&P 500. You'll notice that it has also been forming a similar pattern. So from the high at the beginning of the year, another high in the end of the first quarter, another high here. This was in August, and now after this movement upwards, it seems like there's a strong pressure to keep on selling and pushing the prices down lower. So from the short-term pattern here, you can see there was some form of a slight bullish movement following these two particular trend lines, but then the most recent events indicate a very strong movement upwards, followed by an attempt to push prices down, another attempt here, and also another attempt yesterday. So if today the market makes this attempt and keeps pushing downwards, then there's a good chance that we could see the prices keep going downwards, perhaps even to the previous low of about 11,500. So there's a good chance we could see this particular move being erased here. So to the contrary, if the market was to go back up, then recent highs would be acting as a resistance. So if the price was to move back upwards, then our nice target would be 11,900. So as for now, the fundamentals indicate a very strong economy, but at the same time, if the Fed was to continue hiking interest rates, these would pull more liquidity out of the markets and basically weaken the stock markets. So that's why there's a projection that the price could go down, even though there's a good economic data news. So besides these, there's more stuff happening in the markets. One is the dollar index, which has been declining since September, but it managed to recover on Monday from a low of 104.1, which was last seen in June. So let's look at the dollar index. So here is how the dollar index has been moving down. So since the high that we saw in September, we have seen a consistent push downwards. So this consistent push has been quite predictable. If you look at this low, comparing this low, then you could have easily identified the turning point somewhere around here. So this is how the dollar index has been moving since September. So on the upper side, you can see we had this particular trend line before the market moved down lower and now started trading on a completely different set of rules. So it seems like now we have some form of new resistance happening somewhere along this path here. So I don't know if this is the best. This seems to be a little bit more accurate. So this particular low now is pairing with the highs, and it seems like the newest trend is still bearish. So what we are seeing is a dollar that has been weakening for quite a period of time. So since June, we have never seen the dollar index trading this low. So this particular weakness in the dollar index has been experienced in other currency pairs. So as the dollar has had strengthened to multi-year highs against other currencies, now we are seeing the dollar weakening against these other currencies. This has been the trend, save for this week, where the dollar has come out to be very strong, especially since yesterday. So coming from the positive news that we saw yesterday, you can see the dollar bouncing strongly. Today attempted to go back down, but seems quite resilient since it's trading close to the opening price of the day. So there's a good chance we could see the dollar continue to recover and move even higher. So with this expectation in mind that the dollar is trading from a position of support, perhaps moving towards resistance, then we could be seeing the dollar strengthening against other currency pairs. So for instance, if you look at the pound USD, this is what we have been seeing. So a very strong pound is something we have been experiencing for the last couple of days. So remember, the last time we saw the pound trading this high was in August. So we are looking at basically a 3-month high in the pound USD. So basically the pound is struggling to recover from a level that we have never seen before. That is 1.03266. So for the better part of the year, the pound has been extremely bearish losing against the dollar. But since the last 2 months, we have seen a very strong recovery. So in fact, it's not just 2 months, it's 2.5. So this is the last month of November, October, and some days in September. So in this case, we have seen the pound being aggressively strong against the dollar. So hopefully at some point, the dollar will start regaining and we'll be seeing a reversal in this particular trend. So as per now, you can see the trend lines and what they're indicating. So clearly some form of resistance around this area here. If you look at support, we have this area here. So if you're trading the pound USD, this might be something interesting to you. Noticing that the trend lines are currently approaching each other, indicating a market that is thinning or basically losing volatility. So at some point, we may be expecting some form of reversal in this market. So remember, there's some very strong resistance area here. This was the last experienced in June. So if the market manages to find this as the resistance, then perhaps it's in order to expect some form of a pullback in the market before the market continues in that particular direction. So from the 1 hour chart, you can already see the strong rejection that happened on Thursday, followed by Friday, and then Monday, an attempt to go up, which was faced by selling pressure. And then today, it seems like a mixed reaction. So potentially, we'll be expecting the pound to push down further. So a short-term target seems to be this particular high here. So if the price was to drop back down, then in the short run, would be 1.121479. And if it happens to be strengthening again against the dollar, then 1.22711. So similar case with Euro USD, you can already see that this one lasted for 2 years. So the euro was continuously losing against the dollar for 2 years, and at some point in the year, it was trading below parity. So basically, 1 euro was much weaker than $1. And I'll show you this. So this was the overall momentum. So if you have any questions arising from the presentation, feel free to type those questions in the live comment section, and I'll be responding to those questions right away. So I'm trying to map the parity level here, so everyone can see the period of time when the euro was trading below parity. So this was like 2.5 months, the euro was trading below parity before it broke the upper trend line, and for the last 2 months has been consistently bullish, and this is just the beginning of December. So in December, as you can see, started very strongly, moving upwards. Second day, same. That day pulling back down, and today, yeah, it seems like an attempt to push even higher. So in early morning trading, the euro was losing to the dollar before it started gaining. So there's a good chance we could be seeing the euro continue this momentum. So from the 4 hour chart, this is how it looks like. So a market that is continuously breaking trend lines. So in the early trend line, you can see this. So this is an indication of a strengthening trend line. So from here, this high to the next high is getting higher. The next high breaks this trend line and now uses the resistance as support, forms another higher high, uses the resistance as support, another high, and this is basically indicative of a very strong trend in the euro. So at some point, we'll be expecting some form of pullback. So if the market was to pull back now, following yesterday's movement, then other price levels might be very important. So you can already see here, it's a level that has been repeated quite a number of times. So it acted as resistance twice, thrice here, and then in the most recent momentum, it was acting as support. So there's a good chance we could be seeing the euro drop further down and get to 1.04469. But on the contrary, if it manages to keep going higher, then the previous resistance, that is yesterday's high, would be a nice target around 1.05928. So USD yen has been quite a wonder this year, happening to rally very strongly for the better part of the year. So since the beginning of the year, I'll try and show you these. Where was the first price in January? It should be right here. So this is where the market started trading at the beginning of the year. So since then, you can already see that the USD JPY rallied all the way up to this point, making a gain of about 32%. So since then, that gain has been erased. Now it's up around 18%. So there's been a very strong bearish reversal, indicating a strengthening of the yen versus a weakening of the dollar. So in the most recent movement, you can see that the movement is quite predictable. So from one hand, we have been seeing a lot of resistance, and from this other end, we have been seeing a lot of support happening along this particular trend line. So now the market is on the upwards trajectory or the upwards momentum. So there is some form of impulse attempting to push the market back up. So if I was to mark this and use the most recent highs here, we would have this. So USD keeps on losing to the yen, but now you can see we are looking at the potential end of a pump. So here the market is attempting to go up and get to the upper trend line before we see some further downside. So in the most recent movement, you can see what happened here. So the market was basically trading sideways for a while, managed to bounce all the way up to the upper trend line, and then made a very strong impulse after rejecting the upper trend line all the way down to the lower trend line. So now we are on this particular journey. The market seems to be pushing towards this particular area or towards the upper trend line. And once we get to the upper trend line, then maybe some setups will start occurring, indicating some further bearish momentum. So be very patient on this one, waiting for the market to test the upper trend line. And once there's a test of the upper trend line, perhaps there will be an opportunity to go for a short selling trade as we continue enjoying the momentum of this trend. So USD Swiss franc, similar thing. So if you go to the 4-hour chart, you can see that there was a very sharp drop in the dollar against the Swiss franc, and now these particular number of swings basically indicate some sideways momentum or some level of consolidation here following this particular path. So on one hand, we have the resistance right here, and also the support. So in between, you can see the large swings that are taking almost a whole week. So the most recent swing, a very strong bounce on the lower trend line. Market pulls back, retests the level, goes up yesterday. Today attempts to go up higher before pulling back down, and there's a good chance that if we don't retest this area here, that is the lower trend line, then the other alternative is that the market keeps on pushing higher and gets back to the upper trend line. So that's the projection for USD CHF. So to get the specific price levels, I would say 0.95 as a target, and also on the lower side, somewhere around 0.93250. So that's it for USD CHF. So there's more content that has been happening in the markets. So one of them is that the OPEC Plus countries agreed on Sunday to maintain their current policy. So the current policy involves reducing oil production by 2 million barrels per day, and that's about 2% of the global demand. So this was set last month in November, and it's expected to run until the end of 2023. So investors were concerned that the OPEC Plus countries would implement some further oil output cuts. However, they did not do it. They maintained the same policy, and this was negative for oil. So if the OPEC was to implement some further oil output cuts, this would put upwards pressure on price. However, they did not do it. In the previous meeting, they had already announced the 2 million barrels per day output cut. So this one was already priced in. So in this case, it was a panic selling, and that's why we are seeing oil prices keep on going down since yesterday. So if you look at oil prices and how they have been performing for the last 2 days, let me open this. Should be somewhere here. Yes, this is UK oil or Brent oil. So clearly, it had broken the upper trend line. You can already see the breaking point here. After breaking, the market went back, retested the trend line, and then rallied for 2 days, traded sideways. Then yesterday on Monday, This is when the market news were being processed. The market fell down due to the panic selling. And then today you can see the continuation of the selling. So perhaps the market will test this particular low that we saw 2 weeks ago. So perhaps the market will be testing $80.8 per barrel. So there's that potential opportunity that the oil prices will keep on pushing down lower. So in the previous support level was here, 82.4. So in the last swing, the market managed to bounce from here. You can already see the long tail here. So after this bounce, the market went back and retested the level, broke to a level lower, 80.8, and now it seems headed to this particular level. So there's a good chance that the oil prices will hit 80.8 before making another movement. So for US oil, it's a similar thing. So very strong selling yesterday. Today seems to be continuing. So there's a good chance we'll be seeing the oil prices retest this particular low, and that is $73.6 per barrel. So if we see the market retesting that area, then it might be an opportunity to look for a trading position, either from the bounce or from the break of this particular level. So once the prices get to 73.6, there's a good chance they will bounce, and that would be indicative of a bullish position. If they break, then a bearish position. As for now, I remain bearish. We could be seeing the prices keep going down. Once we get to support, then we'll make a decision about that at that particular point in time. So besides that, there's also the issue of China. So China relaxed travel restrictions in several major cities, raising hopes of a COVID-19 policy shift for the world's second largest economy. So this happened yesterday. For the first time in months, passengers in Beijing and other Chinese cities can board buses and subways without being subjected to a virus test. So now the Chinese are experiencing some level of freedom and lower restrictions in terms of COVID-19. And this will be expected to boost manufacturing and also business activity in China. So with this being implemented, then there's a good chance that there will be higher demand for oil. So as we project that oil prices will keep on going down, as China lowers these restrictions more and more, at some point we'll be expecting to see demand, and this demand will be expected to spike demand for oil. So yes, for now, there's a lot of bearish sentiment in oil, but once we get to support, there's a good chance that we could be seeing very low oil prices to buy and benefit when prices start going up. So next is the issue of the G7. So the G7 basically implemented a price cap, and the European Union implemented an outright ban on Russian seaborne oil, which went into effect on Monday. That is yesterday. So from now going onwards, it basically means that the European Union will not be accepting within its borders any Russian oil coming from the sea. However, if it's coming through the pipelines, that's okay. But if it's coming from the sea, they will not be accepting that. There's an outright ban. However, for the G7 countries, that's outside the EU, for them, they have put a price cap on Russian oil. So they will only be accepting Russian oil at a price of $60 per barrel or below. However, if it's $60 per barrel and above, then they will be accepting that. So it's a developing story. So we're looking to learn how this basically progresses. So one of the key trends that we have been experiencing is one of them, India getting some low-priced oil from Russia. It was having a $30 discount. So with a $30 discount, they basically get this oil, process it, and then export diesel to the rest of the world, and majorly the EU, which has been in most need for cheap oil. So India has been making a lot of money doing this. Saudi Arabia was also following suit, importing Russian oil, processing and selling to the rest of the world. So we'll be looking at how these countries manage business going forward, and whether there will be more bans or restrictions to Saudi Arabia, OPEC Plus, and also Indian oil to the rest. So that's one key thing to focus on. So following the widespread industrial action by medical workers, or basically the strikes happening in the UK, we have also seen strikes happening from teachers in the UK, rail workers, as well as postal workers. The UK Prime Minister mentioned that he may be forced to deploy the military to fill critical positions in case there is a need for that. So the strikes are being held because of the high cost of living. Inflation is currently very high in the UK. Last reading was about 10%. And this basically indicates a big mismatch in terms of wage growth versus inflation. So people are finding that they are spending more of their income on the same commodities or the same household consumption goods. And with this kind of spending, they're left with less money to save, less money to invest, and this is causing a big crisis. So in this case, they're striking to get a salary adjustment, and this is meant to cover the inflation costs. So that's it for today. I think there's more. So when you look at the economic calendar, the major news that we're expecting will be tomorrow. And this is from the Bank of Canada. And the Bank of Canada is basically expected to hike rates by 50 basis points. And this is expected to put the overall rate at 4.25%. So the news will be happening at exactly 6 p.m. So at this point, we'll be expecting a lot of volatility on Canadian pairs. So there's also the issue of earnings. We'll be expecting a couple of earnings this week. One of them is MongoDB, a big database company on Tuesday. Wednesday, we'll be expecting Campbell Soup. This is the biggest soup supplier in the world. So also we'll be getting C3 AI, GameStop, Brown-Forman, and United Natural Foods. Then on Thursday, we'll be expecting earnings from Chewy, DocuSign, Lululemon, Costco, Hello Group, and RH. Then on Friday, the auto from China, as well as Oracle. So once we get this, hopefully we'll get the right volatility in the markets, and also we'll be able to trade these news in the markets. So if you have any questions, I'll be responding to these questions right now, since this marks the end of my presentation today. So there's questions I can see already, review USDN and EURN, as well as BTC. So I believe you have already reviewed USD/JPY today. So perhaps EURN and BTC. So USD/yen, we already identified the current trend on the 1 hour chart. Remember, we are on this journey from the lower trend line towards the upper trend line. So hopefully we'll be able to see a bounce and the market gets to the upper trend line. So our most interesting price level would be when the price hits the upper trend line on the 1 hour chart, somewhere around at 7.67. So this would be an interesting data point for USD/JPY pair. So the other question is on EUR/yen. So let's try and check these out. So as always, remember, this is not investment advice. It's purely educational to help you understand the key levels or the key movements in the markets so that you can make more informed decisions in your trading. So clearly, there's some slightly bearish momentum in this one. I can't argue with this. So you can already see the lows. I would be very afraid trading this one, especially considering the size of the tails we are seeing here. Long tails are indicative of strong volatility. So if your stop loss is very close to a support or resistance level, then it's very easy to get kicked out of the market. So this has been the upper trend line. And it seems it's changing. So from most recent price action on the 1 hour chart, this is what we are seeing here. So market bouncing strongly from the upper trend line. So looks like a good suggestion here. So thank you for suggesting this. So you can already see the journey towards the upper trend line. Once the market gets to the upper trend line, it gets rejected and drops towards the lower trend line. So it doesn't seem to drop aggressively in one straight line. So the last drop, let's see, formed this low here, followed by this low, and then this low. So this seems like the prevailing trend here. So I just want to mark these lows so that it's easy for everyone to understand what was happening here. So market forms this low, goes up, forms a second low, up, bounces from the same level, and then breaks all the way down, gets to the same trend line, and then up, breaks the trend line, gets to the much stronger trend line, then bounces strongly, then heads straight up to towards the upper trend line. So yes, seems like a nice idea to participate in this. especially considering that if you are to go short, then the target stop loss goes just above the area. And if you are right, then you benefit by trading it all the way down towards the lower trend line. So it seems like a really nice idea to participate in this particular pattern here. Sorry, in this particular rejection of the upper trend line here. So we could be seeing the yen continue strengthening against the euro. So last one, BTC. I know there was a request about BTC. So this is Bitcoin. Currently, majorly moving sideways. I wouldn't say there's a very strong trend on Bitcoin. So for the last couple of months, 1, 2, 3, 4, this seems to be like the 5th month that the Bitcoin price is just moving sideways. So I can't say there's a very strong trend here indicating the direction for Bitcoin. So on the short run, if you are, let's say, a day trader, then you'll notice that there's a couple of things happening. So one of them is the long tail on the green candlestick indicating a rejection of more prices. So this may be a strong bounce, indicating that this could push us towards the New York session on a bullish momentum. So there's a good chance that we could be seeing Bitcoin continue pushing higher, and maybe to a high that we last saw on Friday last week around this area of 17,384. So this could be a potential run. But then remember, if the dollar was to break, strengthen, it would also strengthen against Bitcoin, and we could see the prices moving back down. So you have to be aware of that. So Ethereum seems to be the one that had the stronger rejection here on 1246, which was support. Slightly broke the level before bouncing, and we could be seeing the prices rally towards the previous high, and this is the high that we saw yesterday. So potential target around 1,304. So if this bounce holds, then this is the rally towards 1304. So that's it for today. Thank you very much, guys. Thank you for your time. I appreciate your participation. I hope to see you on the next session.